Cardano Army, Keith at Crypto Bullseye. How are we all doing this morning, by the way? We were talking about a $2 Cardano just a couple of weeks ago. Now we hit 50 cents. 50 cents. Did anyone sell at 50 cents, by the way? Who sold at 50 cents and capitulated on Cardano? Because it was met, whoever sold, there was people that were selling and there was people that were buying. We could tell by this candle. That's what we're going to talk about in this video, actually, guys, how you can read clues between individual candlesticks and a combination of candlesticks. And we're going to use Cardano as the example. That's one of the main cryptos that we're following on this channel. So let's go through this together. So firstly, it hit 50 cent. That 50 cent level, was it bullish? Was it bearish? Did it hit a support level? Did it react? Let's have a look. We'll zoom out. This was a previous resistance level for such a long period of time. And remember, guys, the build up of price action for a long accumulation phase, a long period of time, the bigger the base, the higher the space. Once you break out with such volatility, but you need to come back and retest that level of support. So that's exactly what Cardano done with this 50 cent. It come back and retested this as support. So we're going to talk about candlesticks. We're going to talk about the combination of candlesticks and how we can identify when this Cardano chart turns bullish, when the bulls have got another turn at the channel, and then when we can test the 382. Because again, once we break the 382, little resistance to $2. 382 sitting at $1.30. That's where we were rejected. That's where we pulled back hard. So 50 cent, like I say, the story of the bulls and the story of the bears. Who are the bulls and the bears, guys? That's you, that's me, that's people trading, that's institutions investing, that's lots of people, a combination of different varieties of buy orders and sell orders from different types of people that are feeling different types of emotions on different types of days. What do I mean by that, guys? How did people feel on this day? Tell me, on this red day here when Cardano dropped, how did you feel when Cardano dropped? All the way down to the bottom of the session, 16%. You probably didn't feel that bullish on Cardano at that time. What about when we dropped all the way to 50 cent? If you were looking at your P&L when Cardano dropped at 50 cent, let me know in the comments how exactly you felt. Did anybody capitulate? That's what I want to know. Did anybody sell at 50 cent? Did anyone sell at 55 cent? Did anyone sell at 60 cent? Has anyone give up on crypto, sold all their Cardano and moved away? So the aim of the game in the short term, right? We've seen this big bullish candle. That was a bullish candle. That was an RS flip that come from previous resistance, come back down and flip support on the macro high time frame. So that was bullish. We can tell it was bullish because from the bottom of the range, bears at one point pushed price all the way down here. And then the bulls regained 60.95% on the day. So you don't get much more bullish than that, guys. Then what happened? Let's stick a fib retracement on here. Then what happened? From this swing low to the swing high of the candle, you can see we come back down. This is the 50% level. You've got the 382 here, you've got the 618 here. This is the 50% level. So we've had a bounce off the 50% Fibonacci retracement, and then it's took, let's count. It's took the bears 1, 2, 3, 4, 5, 6 days. It's took the bears 6 days to push price 50% back down from this previous candle. Then what happened? Green, green. Now, what's the significance of this green candle here? We've got 6 days of bearishness. It took the bears 6 days to grind down. What's this? It's a descending channel. We talk about descending channels all the time. Once you've got a bearish move to the downside, and then you start seeing a descending channel that's showing exhaustion. That signal exhaustion, you've got a bounce at the bottom of this channel. We've hit the bottom of this channel. Then this one green candle took out the previous 6 days of what the bears had done in one day. Wiped out 6 days in 1 day. So when can we turn bullish within this channel? Let's identify what do we need to do in the short term. We need to take out this previous swing high, sitting at 82 cents. We need to take out 82 cents in the short term. And then we need to do something else. I'm going to talk about moving averages. Let's stick on the 20. So we've got the 20 moving average. So this is double confluence, guys. This is double resistance. And you can see that we've already had a reaction from this level here that we were just talking about, the level that we need to overcome, the 82 cent level. So if we get a break, it's going to tell us two things. It's going to tell us that we've regained this as support, hopefully, and we've flipped this previous resistance, which was the 20 period moving average, the 20 daily moving average, and we would hope to retest that as support. That's going to be bullish in the short term. That's what could happen in the next few days, guys, not the next few weeks. So the next thing is going to be the 50 period moving average. That's sat at 91 cents before we get at the channel. So the 50 is going to act stronger resistance than what the 20 did. But if we can hold the 20 as support, what you'll see is this. See bulking, price bulking between the moving averages happens time and time again before you can get enough momentum to break through the 50 and then retest this previous top of the channel, which is currently sat at around about $1. So why is $1 going to be an important level? Let's measure this channel. What I'm going to do is I'm going to stick a fixed range volume indicator from the top of this channel here all the way to the 50 cent level, including where price action is now. Look at where the biggest area of resistance is on this. When you're above here, that's support. When you're below here, that's resistance. This is the biggest area of the buildup of price action between the whole of this channel. And look what it is, guys, $1 exactly. Psychological level, $1. So in this channel, once we break and close above $1, that's indicating one thing. That's the strongest resistance within this channel. And if we flip that as support, that's the biggest indication that we're going to go back and test the macro 382. We've been looking at this for years, guys. The macro 382 from its previous all-time high, that's the 38.2. That's where we expected Cardano to reject before, and that's where we need Cardano to break through. Again, guys, I'm sticking with my conviction. There's not much resistance here. There's not much resistance here. There's not much resistance here. Once we break that 382, I see little resistance all the way to $2 on Cardano. So that's how I see the journey through this channel to identify, or how we can identify who's got momentum at any one time. Just looking at candlesticks. We haven't even brought the indicators up, guys. There's the indicators. Oversold, coming up on the stochastic. You've got this, guys, oversold on the RSI, coming up. Had a cross over the RSI moving average. That's without even looking at the moving average, as we've seen and identified what we need to do by just looking at candlesticks and identifying who's buying and who's selling. So if you did find this video useful, guys, I've chucked in a bit of education because crypto class wasn't successful enough. Nobody wanted crypto class. So I'm going to be sticking education in with these videos, guys. So if you did like it, let me know in the comments and I'll see you in the next one.